Like I said, this is something that we are preparing for. Physical precious metal ownership, gold and silver, getting yourself out of the dollars instead of saving in dollars, which are rapidly becoming less and less, more and more worthless. Let's put it that, less and less valuable, and own it and saving your savings, your well-being in precious metals instead as your protection against it. Not focus on, oh, look at the dollar index is up today and gold's down another $10. Whatever, fine. We're more worried about where we're going to be a couple of years from now, 5 years from now, 10 years from now, how we're going to get through this storm, because the storm is inevitably coming.
The price of gold remained near its lowest level in a month on August 11th, even as U.S. inflation data for the past month came in lower than expected. This week is turning out to be the worst for gold in 7 weeks because the U.S. dollar and the interest rates on bonds are still strong. Craig Hemke, the founder of TF Metals Report, says that while the dollar is strong and gold is weak today, he is more concerned about the future. Hemke emphasizes that he is preparing for a future where there may be economic challenges, and he believes that owning precious metals is a way to safeguard against those challenges. In light of this, Hemke highlights that the battle to bring inflation down is tough. But as we go toward the end of this year and into the next, we're going to wonder where the inflation numbers will head. The next Federal Open Market Committee meeting will be held on September 19th and 20th, 2023. Market expectations for the September meeting are mixed. Some analysts believe that the Fed will continue hiking its benchmark borrowing rate increases after a hawkish pause in June, saying that even though inflation has moderated, it remains a concern. Hemke mentions that the Fed could face stagflation, a situation with both inflation and economic stagnation. They might reduce interest rates to deal with inflation, but this could lead to bank troubles and a slowdown in the economy. Let's watch snippets from Craig Hemke's interview, but before getting into the video, make sure to subscribe our channel and give this video a thumbs up.
And so far in the month of August, it's been bad. The dollar's been rallying and silver's down something like 9% month to date, and gold's down around 3%. It's just been horrible. Probably won't continue this way. There's not a lot of reason for the dollar to continue higher. It's about to run into some pretty stiff resistance, just around 103. And then what we'll try to get through, Elijah, is just the next couple of weeks. 2 weeks from Friday, the 25th, will be Jerry Powell's appearance at the Jackson Hole Symposium. All the other central bankers from around the world will be out there. And so everybody will be focused on what he says and how he says it. And, are there more rate hikes coming and all that jazz? So if we can just get through these next couple of weeks relatively unscathed from here, and I'm not sure we can, but we'll try, then things will get interesting as we get later into August and into early September and then into the rest of the year. What always gets lost by the politicians, who have something to promote, and the media, they're talking, well, we got to get inflation back down to 2 or 3%. Well, that doesn't mean, we're going back to prices from 2019, resetting everything back down and then only going to, those prices are all already cooked in. We're just talking about 2 or 3% from here. And so that battle is lost. Whether it can get it down to these 2 and 3% levels and stay there, all we're doing right now in the year-over-year numbers, we're replacing the month of July and then the month of August and the month of September last year, which were month over month 0.6%, 0.7%, and replacing them with this year, 0.2%. So the year-over-year number just can't help but come down. Now the question will be, once we get toward the end of this year and into next, I'm not so sure that, this idea that the Fed's going to get to 2% inflation is ever going to happen. I think it's more likely we're going to stay north of 3 or 4, even on their favorite measures. That then gets entrenched as more of a expectation that doesn't go away. That breeds even more inflation. And at some point, the Fed is just going to be left with this choice, kind of a stagflationary thing where they're not going to like the outcomes. They're just going to have to deal with the inflation and start cutting rates just due to whether it's going to be bank failures, inevitable economic contraction that comes from the higher mortgage rates and all the other higher, revolving credit rates. It's going to get really messy. Been waiting for it to get messy. I thought it would get messy by the second half of this year. We're not there yet, but I don't know if you can postpone economic mother nature indefinitely.
Talking about the impact of a possible BRICS currency on the US dollar, Hemp points out that the US dollar only became the top currency in 1944 and won't remain that way indefinitely. He suggests not getting too hopeful about events like meetings in August or predictions of certain systems collapsing. These expectations have often not turned out as anticipated in the past. Among the main topics on the BRICS agenda is the development of a new currency. They aim to increase trade between BRICS nations using their own currencies and decrease reliance on the US dollar. Hemp emphasizes that if the U.S. national debt and expenses continue to grow, it could become unmanageable. This might lead to a situation where the Federal Reserve, responsible for managing the economy, has to take further actions to control the situation, much like Japan has done. As of the first quarter of 2023, the United States holds the highest national debt in the world, totaling $30.1 trillion owed to creditors. Additionally, credit card balances increased significantly in the second quarter, rising by $45 billion, nearly 4.6%, to reach $1.03 trillion, according to the New York Fed's latest report on household debt and credit. Let's watch Craig Hemp's interview with Liberty and Finance.
The eventuality of some type of alternative to the dollar, right? Because, history, that's how it works, right? Before the dollar was British pound, and then, before the British pound, the reserve currency was whatever it was, Spanish currency or the Dutch currency or whatever. It's a transient deal. The U.S. wasn't the reserve currency before 1944. It won't be the reserve currency in 2144. At some point, some alternative is going to appear. What I'm not going to stake my hopes on is some BRICS meeting in August. You and I have both been down this road before, right? I remember all the people, and you still see it. COMEX is going to collapse. COMEX won't make the September deliveries, that sort of thing. You just kind of roll your eyes, or you hear all these other stories, about the impending, great reset that's going to happen on some certain date, all that kind of stuff. I don't know. I couldn't possibly know what has been discussed behind the scenes between Russia and China, and their allies. They may discuss something, they may mention something, they may announce something. We'll see. But I've learned that the last thing I'm going to do is sit there and go, okay, I'm going to hold my gold until August the 24th. And then if I don't hear this on a certain date, I'm selling it all. I sure hope there aren't a lot of people looking at it that way. We're finally getting to that point where things are really getting away from the U.S. government. This next fiscal year, even this fiscal year, which ends at the end of September, U.S. government's going to be getting awful close to $1 trillion in debt service payments. Going to blast through that next year. It's hard to see where they won't. There's $24 trillion worth of existing debt that has to mature, be refunded, and rolled over in the next 3 years. Well, a lot of that stuff was issued back in the zero interest rate policy years of the previous decade. So that's going to come due. The stuff's $24 trillion that's currently only paying 1.5%. What's it going to pay if the Fed isn't rapidly cutting and reinitiating QE? 2, 3, 4. So we're going to blast through $1 trillion in annual debt service costs. And eventually you get to this point where tax revenues are, 3 trillion. The debt service is 1.5 or 2 trillion. And on top of that, you've got all the entitlement programs and the military budget and just everything else that goes with it. And the whole thing just spins out of control. The U.S. eventually goes toward like a yield curve control policy where the Fed is just simply monetizing everything above a certain percentage, like Japan, just trying to keep it under control. But the end of the great Keynesian experiment, this debt-based monetary system, is simply a mathematical certainty. We've been talking about it since 2009. We don't know when that final breaking point comes. It's like a Jenga tower. You just keep pulling out the things and putting it on top, and it's conceivable you can keep going, but eventually the whole thing falls over. And that's where we're headed. Again, it's not a function of China and Russia. They are responding. The BRIC countries are responding to that frailty, to that math, to that certainty of how this all implodes by trying to come up with some alternatives. So they don't have to, their fortunes aren't tied to the dollar anymore.
Considering the potential impact of a new BRICS currency and the United States mounting debt, what do you think could be the long-term consequences for the global financial system? How might these factors influence the value of currencies and precious metals like gold? Let us know in the comments below. That's all from us. If you like this video, please like, share, and subscribe to our channel and click the bell icon to be notified when we release new videos. Currently, 95% of our viewers have not subscribed to our channel. Our next goal is to reach 2,000 subscribers. Please consider subscribing to our channel and helping us reach our target.